Hello everybody and welcome to this week's trading tips from Smack the Markets for week commencing the 17th of January. This week we're going to take a look at the oil market from a technical perspective. Now, oil has had a phenomenal run since early 2020 when it broke through the zero level and went to minus $40 a barrel for a short period of time. Since then it's had a very strong run. It's moved up to just north of $80 a barrel where it's sitting today. But having said that, from a technical perspective, the market is actually pointing to even higher prices for oil. Now, before we take a look at the charts, I just want to draw your attention to the Smack the Markets website. If you've taken a look at the year-end review that we published just before the end of the year, in fact just before Christmas, you'll notice that there are going to be some changes this year for us. We are closing the membership to new members, and from Wednesday, in fact on the 19th of January, the membership will be open to invitation only. We will be launching some education programs for new traders to learn our trading methods, learn correct risk management and correct sort of trading protocols. And once you've passed those and pass those successfully, then you'll be able to be invited to join. But if you would like to join prior to that and also lock in a long-term discount, then you can take advantage of the offer that we have on our website at the moment. It's only open till Wednesday the 19th of January, that's this Wednesday. You can lock in a £30 discount per month for life, so the price being £100 fixed per month for the lifetime that you are a member. And we provide many services, not just a trading room, but there are constant ongoing education and webinars and all sorts of different sort of trading services that we provide, including trading clinics. So if you're interested in that, pop along to the Smack the Markets website. You can find out more by coming through to the trading room page, and you can find out the details there. And if you've got any sort of questions, then you can obviously come to the contact us tab and drop us a message, and we'll arrange to speak to you and get back to you. So let's go and take a look at oil now. Now if we have a look at the oil prices here, let's come along to the higher time frames first of all, because whenever we're building a trading decision, we build it on the analysis based on these higher time frames. We want to make sure that there is a macro move in the market. You can see that with oil, we can see that this move has been very strong from the initial crash down in 2020. It's now sitting just north of that $80 a barrel area, and there's certainly some resistance through here around that sort of $80 price point. Above here we've got nothing in the way. We've got this big trading window up to around the 105 level, and this is where the market found support going back into, well, sort of 2009 to 2015, when oil was sitting comfortably above the $105 a barrel area. Since 2015 the market broke and fell underneath there, so we've got this void here in price that is, there's nothing there. So it's not surprising if the market does get up here to around that 105 level. Having said that, there's a lot of oil industry analysts which are suggesting that the $100, or they don't like to see the market above $100. It's not healthy for the industry. So even if we said that $100 is the limit, that's still $20 north of where we are at the moment. So it's still a phenomenal move from where we are at this moment in time. And even looking at the supply, even looking at the technicals here on the charts, even looking at the fundamentals, they're all really supporting higher prices here for oil. Now, even when we look at this on a monthly perspective, we can see that from a technical perspective, things are looking very strong. Having said that, if we come down to the sort of weekly chart, we can see that on the weekly chart we've had 5 or 6 weeks now of very, very strong prices as the market's moved up this last leg of the trend. So I wouldn't be at all surprised to see if we see a little bit of weakness coming in here, a little bit of a pause, possibly a drift back into $80 a barrel maybe. Certainly I would like to see something, some kind of retracement before seeing a push higher and the next leg higher on these swing time frames. Now as traders we can trade on multiple different time frames for multiple different time horizons. We like to trade swing trades. That's trades where we'll hold them open for several days. We also like to trade intraday time frames as well, where we can get much higher returns much quicker as well. And looking at this market, we're not looking at sort of getting in and holding it for the whole run of $20. I mean, that would be particularly nice, wouldn't it? But if we could do that, but the chances of trying to sort of capture that timing and capture those sort of pullbacks is sort of quite tough. So again, it's a good idea to look at opportunities on different time frames and manage those trades accordingly to those time horizons. So a swing trade, if you manage to get something in on a weekly chart, maybe a weekly pullback for example, well then you'd expect to maybe hold into that for a few weeks. But something here on a intraday time frame, we might start to look at these for several hours or maybe even several days. At the moment here you can see that on the 8-hour chart we've got a very strong run in oil. The market's sitting above the $83 level at the moment, and this is where price has found resistance multiple times. So we've got a good chart structure here across all of these time frames. The 4-hour again looking very, very nice, and each time the market comes back into levels it seems to have another burst of momentum and the next leg higher again. So we're just sort of coming back into that sort of price point at the moment, similar type of pattern. So again, if we come down to maybe even the 60-minute chart, you can see here that 60, well, there's certainly more ebbs and flows and snaking going on with these charts, but you can still see the structure of higher highs and higher lows. When we get down to 60-minute charts, we use our pivot points. These are Smack the Markets pivots. They're based on London time frames, and you can see that every time the market rallies higher, it runs out of steam at pivot points, it pulls back into pivot points, it finds support here when the market has that retracement, then we get the next leg higher and the market finds resistance at pivot points and it pulls back into pivot points as well. At the moment the market's just pulled back into pivot points. So again, across multiple different time frames here, the picture for oil is looking pretty strong, and it's looking sort of quite nice that the market may well continue to move higher back into towards this sort of $100 a barrel level. Now when you look at markets like this, we always need to apply good sound risk management. There's no saying it's going to go to $100, there's no saying it's going to go to $100 in one direction and one swift move. Very often we'll get some serious pullbacks like we've had here in the past. So we always need to manage that risk and manage each individual trade on different time frames accordingly. So I certainly hope it helps. It certainly gives you some sort of perspective of our view here on the oil market, and again looking forward to speaking to you again through 2022. And again, if you're interested, please take a look at our YouTube channel and you'll find lots more videos on different markets and different trading techniques that we use. Hope it helps. I'll speak to you soon. Bye for now.